What this means is we have simply a fair value gap that gets produced over here. It gets respected, and we see price pushing up again. We see price reacting off a fair value gap and then bouncing higher. So now we're at an interesting region where, yes, we're in the premium. Yes, we've reacted off this particular fair value gap in inefficiency, but we haven't seen buyers commit, as in we haven't seen the higher pricing we'd expect from, as in like we've seen from this demand zone. So what does that mean in price? Well, from here, what we need to consider is that we have two draws on liquidity. We have a bearish draw on liquidity because this is a weak low. Again, this low hasn't produced anything. But also we have a bullish DOL. We have a bullish draw on liquidity because this high over here also hasn't broken a low. So we have two potential scenarios. Of course, that's not very helpful. That's not very useful because the markets can only move up or down. So to analyze this pair in a deeper fashion, we have to now go down to the daily time frame. So the daily time frame, again, we look at the fact that we've had our structure break to the downside. So again, this is our current dealing range. So we have a dealing range high and we have a dealing range low, just like this. So right now we are in a premium, so we're above the 50% level. So this gives us a validation to look for potential sells. So the way that I see GBP USD going into the following week is the following, right?